Hi there, I'm Andrew Macken and welcome to this week's edition of Video Insight. Now, the last 12 months have been a volatile period on the global markets, and on top of that, sharp movements in the Australian dollar have created a bit of a rollercoaster ride for Australians who invest globally. And this global volatility is set to continue, in our view. We are living in a very strange and unprecedented financial world. Consider that, as of today, the following 6 statements are true. Number 1, you need to pay the German government for the privilege of lending to it for up to 10 years. Yes, normally one would expect the borrower to pay the lender, but not in this case. Number 2, indeed, you need to pay the Swiss government to lend to it for up to 25 years. Number 3, China's private investment growth is running at less than 4%, and this is just 1/3 the rate of growth that was being achieved this time last year. 4, for the first time in history, the European Central Bank has begun buying corporate bonds in the open market and directly from companies. Now remember, the money used to purchase these assets is created out of thin air. 5, Britain may vote to leave the European Union, which, if so, could well begin the breakup of the EU in its entirety. And finally, 6, Donald Trump is 1 vote away from being the President of the United States. Now, these statements are not intended to scare investors, they merely highlight the new reality that we find ourselves in. Many of these statements would have been considered completely unrealistic just a few years ago. So this begs the question, therefore, what unthinkable statements will be true over the coming few years? By definition, we don't know what we don't know. All we can do is make decisions with a premise that the world is uncertain and full of unpredictable events. This is why we believe the Montgomery strategy is so valuable to investors. Montgomery seeks to protect the downside via its short portfolio. It seeks to generate stock-specific alpha through detailed fundamental analysis of individual businesses, and the strategy is flexible. Now, by flexible, we mean Montgomery has the ability to invest across geographies, across industries, and across company sizes. The Montgomery strategy is also flexible in how much net market exposure it can take on, meaning the long exposure minus the short exposure. Said another way, we view Montgomery's short portfolio as an insurance policy which can be ratcheted up or down in size depending on whether or not we think we need more or less insurance given the global market conditions. That's it for this week, and we'll see you next week.